Hey there! Are you wondering, how do I sell on Amazon in Canada? Well, that's a question I get quite frequently. So I went ahead and just put the steps together, which I'll go over here in this particular video. My name is Kevin, and I'm from MaximizingEcommerce.com. I help people build e-commerce businesses that they can be proud of. And in this video, we're going to walk through those steps that you can take to grow your business in Canada, and just a few things to keep in mind as you're doing that. Now, also, if you want, I put together some notes in this particular handy checklist guide. Just simply go over to CanadaChecklist.com. Again, CanadaChecklist.com. And it's an absolutely free checklist I put together with all these items that I'm going to talk about here. So just to go ahead and get into it, first thing you're going to want to do is validate your product. Generally speaking, if it's going to sell on Amazon.com, it will also sell on Amazon.ca. So we're just going to take the assumption here that you're a US-based seller and you're going to grow into Canada. You can pretty much follow some of these steps if this is not exactly the case with your situation, but we're going to go with that. So we're going to say you've got products that are currently selling on Amazon.com and you want to know, will it send, if I send it into Amazon.ca, into Canada, is it going to sell? And the question is, well, there's no real guarantee, but the best way to at least hedge your bets and give yourself that best chance is to at least take a look. So what you could do is just go to Amazon.ca, just like you go to Amazon.com, but you go to Amazon.ca to look at the Canada version. And then what you're going to do is just use Jungle Scout. Like, I'm sure you've probably used Jungle Scout, or there's other tools too. It doesn't have to be Jungle Scout, but that's what I personally use, is Jungle Scout. You can take a look in Jungle Scout, run the report, and it'll tell you, what are the sales for similar type products. So if you sell coffee press makers, you could just look up coffee press, coffee makers, and look and see what comes up. What are the sales like? Don't treat it as gospel, as this is exactly what it's going to be. But what I would do is just take a look. Is a product similar to yours selling? Now, I wouldn't look at it as, well, is it going to tell me exactly how mine's going to sell? We never really know. It's the same thing when you're in Amazon.com. You don't truly know until you try. But a good rule of thumb is, generally speaking, a lot of sellers, including myself, sell about 10 to 15%. Last year was about 13%. I hear 10% quite frequently. So let's just use 10% as a good benchmark. But that doesn't necessarily mean that the same product is going to automatically sell 10% from one marketplace to the other. So when you're validating your competition and you're seeing that they're on Amazon.com and Amazon.ca, I wouldn't look too much as to the 10% rule. I would just see, is it selling? Because if it's selling, that's a good sign. Oftentimes, what happens is on Amazon in the US, as I'm sure you well know, a lot of sellers engage in like giveaways and kind of aggressive tactics to really market and get their product out there. So that can sometimes inflate their sales numbers in the US a little bit. People don't necessarily do that in Canada, from my experience. So I would say just look at it this way. If it's selling, something similar to your product is selling, it is at least worth trying. So we'll get into a little bit more of how much to send in. So, but before we do that, what you're going to have to do to get your goods across the border, you're going to have to register with the Canadian Revenue Agency, which I'll refer to as CRA. CRA is kind of like the IRS, the Internal Revenue Service of Canada. But instead of just being for income tax, they're also over sales tax. There's 4 provinces that have provincial tax, but just to get started and to keep this simple, we're just going to talk about the goods and services tax, or harmonized services tax, the GST, HST. So basically that's their federal sales tax that pretty much all provinces are engaged in to some degree. So if you have at least $30,000 Canadian in sales, that's about 23,000 US. So if you have about that amount, you're going to need to register for goods and services tax, basically that GST sales tax. If for whatever reason you don't have that, you might still want to consider registering for GST, and I'll explain that here in just a minute. But also in regards to that, you're going to have to register as if you're assuming you're US based, a non-resident importer. So if you and your company are based in the US and you want to sell in Canada, they want to know who's trying to get their goods across the border. So it's, you're no longer going from, one state to another state. You're not shipping from Florida to North Carolina. You're shipping from Boise, Idaho into Ontario, which, now you're going across a border into another country. So they just want to make sure that you're registered and they know who's bringing stuff into the country. It's not overly complex. Now, what's going to happen is you're going to be charged for what's called the GST, for basically the value of the goods. So you're going to have to pay that when you go across the border. Now, the good news is, generally speaking, that could also be a credit when you file for your sales tax, which you only have to do once a year. But if you, I don't want to get too in the weeds on the sales tax part, we'll do another video on that. But the point of it is, if you were registered for their sales tax, their GST, and you're collecting it, when you go to pay that money at the end of the year, you're going to subtract what you paid. Generally speaking, I'm not a tax professional, so please check with a tax professional, but you're going to pay less based on what you paid at the border, because that's money you've already paid into the system, so to speak. So you can't regain that money you paid at the border in GST if you're not registered and collecting. So that's why I say it's a good idea to consider doing it. And if you're doing less than $1.5 million Canadian a year in sales, you only have to file once per year, not even quarterly, just once per year. It's at the time of doing that, it's basically April 1st would be your deadline. So as long as you're in before April 1st, you're good for the previous year. Then what you're going to do is you're going to add your listings. So unfortunately, it's not as simple as just going into your listing in Seller Central and just clicking a button that says sell in Canada. There's some tools that kind of have that do that, but that's really selling your US offer, to people available in other countries. That's not exactly what you want to do. So if you're going to do an FBA offer, so you're going to ship inventory into Canada so that their customers there are going to get Prime, you're going to want to make sure that you add a new offer. So you're going to basically go into Amazon.ca, the Seller Central. It's the same login. You're just going to switch to CA, and you're going to add, based on the ASIN or the UPC code, your new listing. Or not really your new listing, it's the listing you already have. So you're just going to upload that into Canada. Oftentimes it'll match what you have, pictures and your descriptions and whatnot. If not, you can just add it in there. If you need to do a bulk upload, because maybe it's going to be very time consuming to do it individually and you're comfortable with bulk uploads, you can ask Amazon in the US, just put in a case for access to the category listings report, which is basically pulling out the version of the bulk upload for your US based products. You're just going to have to change the browse nodes, which is the categories and subcategories, and then of course the pricing and whatnot. So that's an option. But either way, you're going to have to add your listings. Don't want to get too caught up in the weeds on that. Then you're going to want to send in some inventory. So what I've found a lot of times people get hung up with is they think about like, oh, okay, well, if I'm ordering 1,000 units to the US, then maybe I need to order another 1,000 units to go to Canada. No. If you're doing really good, you might be seeing maybe 20% of your sales in the US in Canada. So you don't need to match one-for-one inventory. That doesn't make sense. You can start off with a small amount. So I've seen people like myself who just basically, I keep like in a storage unit and in my garage some inventory, and I just sometimes when I have a new product, I'll just ship a few units into Canada just to test it out. And that's basically what I did in the beginning. I think it was like a dozen units of 4 or 5 SKUs that I send in just to start. Once, just kind of get the ball rolling. Doesn't have to be huge. We're thinking long-term here. This is a long-term sales channel, not just, a get-rich-quick scheme or anything like that. So we don't have to send in huge amounts. So that way kind of mitigate some of your risk. And then once you get ongoing, what you could do is if you're like me and you're a control freak and you like to receive everything, then I just ship bits and pieces to Canada and to the US. But if you have your supplier send everything directly into Amazon, or you have a prep company you deal with, you could just have your order split up. So maybe if you're doing 1,000 units, maybe 900 units go to the US and maybe 100 go to Canada, or whatever the case is. So if you're going to see 10 to 15% of the sales potentially, you really don't need to have more than 10-15% of the inventory. Sometimes, maybe it's going to do a little bit better in Canada, or maybe not quite as good. But, once you get some sales data, you can gauge. But just to start off with, just start something small, because at least you're going to start building that algorithm. It's basically a new algorithm, but you're not starting totally from scratch, because your reviews are going to carry over on the listing page. It won't show up necessarily when you do the search. It'll just show no reviews, but if they click on the page for your garlic press, so to speak, your garlic press reviews will be there for people to see. And even if you have like 2 or 3 reviews in Canada, your reviews from the US, they'll be able to see those as well. And I think people at least in my opinion, from what I've seen, people look at those reviews from the US as well, and it does help you, so you're not totally starting out from scratch in Canada, but at least you want to get the algorithm going of that this listing is getting sales. Point being with sending in inventory. Then once you're up and running, you want to maximize the currency. So sometimes people say, oh, well, this sounds all real confusing. Well, I just want to throw this out there. Currency is basically 6th grade level math. And I can say that with a straight face because my sister is a principal at a elementary school in Texas. And she also used to be the math specialist for the school. So she knows what grade levels they teach certain things. So I asked her that question, if we were to talk about currencies, I don't necessarily talk about currencies, but it's ratios. So if you can handle 6th grade level math, you can handle currency. But what you want to do is you want to maximize the currency, because what's going to happen is if you go to like xe.com or one of these Forex websites and you want to see what is it US to Canadian, let's say it's 1.33 Canadian for every 1 US dollar. Well, what's going to happen is when you collect money back in US dollars, because eventually you're going to get this money in US dollars, you're going to want it that way anyway. But when you bring it into US dollars, into your US bank account, for example, you're going to lose about 4% on that. And then let's say you got to pay the bill outwards to like when you go to pay your goods and services tax. Now all of a sudden you're going to lose a little bit when you send it with your credit card company, or if you do a wire transfer, your bank's going to bake in some fees. And there's going to be fees, they're not even going to say they're fees. It's just going to be, if you go to xe.com and you compare like what Amazon transfers into your bank account or what you're paying when you go to send in the like a payment to the Canadian government to pay those taxes that you have to pay for the goods and services tax, you're going to find that you're losing some percentage. And there's no way around it. Basically, when you go on some of these websites online to see what the exchange rate is, it might just be that that's what the banks, like big banks and high volume transactions, they charge each other. But for those of us who aren't big banks, we're going to have to pay something along the way to move money from one currency to another. So Canadian dollars to US dollars, because they are different currencies. So you want to maximize this. So anytime you're paying anything, you can pay anything in Canadian dollars before you bring it into US dollars, you want to do that. Now, some things you're just going to do by default. So your referral fees, your 15% or whatever percentage for your category you're paying, you're going to have that subtracted before you get to the disbursement, just like in the US. Whatever fulfillment fees you're being charged, that's going to be subtracted in Canadian dollars as well. So now you got a disbursement. So you're going to be charged inventory. That's going to be coming out of that as well. The nice thing is if you're paying the, $39 a month or whatever it is for a professional account, you're not charging that twice. They only charge you once for North America. So that's one nice thing just to point out there. But the thing I do want to point out though is, if you're, let's say, putting using a credit card to pay for your PPC in the US, that's all US dollars, so it's no big deal. But what's going to happen is, let's say you're paying your PPC, so your PPC gets charged to your credit card, which you're paying, which you just paid something in that exchange with your credit card company. So now it's posted to your bank account in US dollars, but it was charged in Canadian dollars. So in that transaction, you lost compared to what you could have lost, or you could have paid. And then on top of that, you lost money. Let's say you brought money in from when you repatriated it some way or another, whether it's 3-4% from Amazon or a currency holding company, which we'll talk about here in a minute, you're going to lose something in that transaction. So let's just say, hypothetically speaking, instead of putting it on a credit card, well, not hypothetically, this is what I recommend you do, you just have it come out of your account, so out of your disbursements. So your disbursements, they figure out boom, 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 this is what your charges are, this is the sales you brought in minus your charges, this is what's left over for you. You want to have your PPC come out of that as well, because that way it's all in Canadian dollars. So there's no exchange. You're not losing anything in an exchange because you're just paying whatever in that local currency. So there's no baked in hidden fee. Now, but then eventually you're going to want to get your money in Canadian dollars into US dollars. So rather than putting it directly into your bank account, you can use a company like Payoneer, is who I use, and they charge 2% more than what the like xe.com or whatever you see is online, which you're like, oh, I'm still losing something. But 2% is better than 3-4%. So let's just say conservatively you're saving 1%. Could be more, but let's say you're saving 1%. 1% over time is a lot of money. I mean, we're talking about, what literally could be thousands of dollars for you over time. It's worth it to just have the money held there. And then where you can also save with maximizing the currency is, let's say you have it, basically what like Payoneer would do is, instead of money going directly into your US bank account, which is being converted over into from Canadian dollars to US dollars, they put money into a Canadian dollar account, and then when they transfer money to you, they're giving you a break there. But you can hold money in that Canadian account. So what you could do is then use that, and at the time I record this, they're not charging you anything to pay your Canadian tax authorities, the basically that sales tax, that GST that you have to pay. So you're paying that with Canadian dollars, and you can't just go into Canada and set up with your US based company a bank account. So this would be kind of a way around that. There's weird rules with, I don't want to get too deep in the weeds on that, but there's weird rules with other countries and setting up bank accounts. But this is kind of a way around it. So I wouldn't worry too much about that, because you have a way around that. Then ongoing, you just want to manage it and grow it. Now, the good thing is, I've found is, if you feel like you spend a lot of time on PPC in the US, well, a lot of that data is going to be the same data. Canadian speakers, by the most part, are English speakers. The culture is very similar. It's all based on common law. It's, they were once a British country, just like the US was. There are friends that most of them live not far from the US border. I forget the percentage, but a very high percentage of people live within something like 100 miles of the US border. So by and large, they're very much people in Canada, your customers in Canada, I should say, are going to be just very much similar to your customers in the United States. So your PPC that you use, like those keywords that you've gotten data on, you're going to find a lot of the same stuff's going to work. And then once you get it optimized for Canada, which really would just be the bidding might be a little bit different. Oftentimes people find the bidding is less expensive. I tend to go kind of aggressive and use the same bids that I started off with in the US, and I just get higher placements. So it just depends on what your strategy is. But once you get PPC going, you don't have to check it in Canada as often as you do in the US. And I find, generally speaking, I think that's the same thing with the competition. People aren't checking it as often, so you don't have to worry about like, oh, well, if I don't check it, everyone's going to be, it's not quite as competitive there, which is a good thing. It's almost kind of like the Wild West, because there's these steps, fewer people are doing it. And people might say, oh, well, it's only 10-15%. Well, 10-15% adds up. I'd love to have 10-15%. And in most cases, we're not adding that much more to our cost base, because whatever software tools you have, a lot of them are going to work in other countries. So then what you want to do is make sure that you are also paying your taxes when we're managing this. So I mentioned, you want to get a currency account so you can pay the goods and services tax, that sales tax. Again, talk to a tax professional, not just listen to a YouTube video from Kevin. I'm trying to give you good of information to help you in your own research, but I'm not guaranteeing any of this for your particular situation, because you never know who's watching, what their situation is. Generally, for most sellers, what you're going to do is, if you have a US-based company, Uncle Sam, the IRS, the US government, is who you're going to pay income tax too. So you pay the sales tax just as if, like, let's say you're registered in, Texas and California and Florida and a bunch of other states, and you file sales tax to all those different states, and you pay the sales tax that Amazon collected for you. So you're just passing it through. It's kind of the same thing with GST, except just going to Canadian government, and if it's applicable to you to also register in some of the provinces, then you do the same thing. In those, I think there's 4 provinces that have a provincial tax. But that's basically their equivalent of sales tax. But income tax, just as in the US, you can't get around having to pay income tax. The US government wants to know, what was the profit you made off of your sales in Canada? I'd love to get around that, but we can't. It's just, it is what it is when we're in business. And a lot of this has to do with like treaties and things of that nature. So even though you're making sales in Canada, but because you're a US based company, you're going to pay the US government for income tax. So just consult with your CPA. If you don't have a CPA, I would highly recommend getting one. If you've been DIYing your income tax, I would definitely dissuade doing that. A lot of times, especially now that you're in business, you're going to find a qualified CPA doing your tax, or some sort of tax professional is going to find things that you wouldn't have even thought of that make it worth, spending, instead of, $100 on TurboTax, spending, $400 or $500 on a professional accountant. Just do it. And that's not because you're selling in Canada. I think that's just because you're in business. But because you are selling in Canada, you're going to have to account for, it may seem kind of weird, like, oh, there's going to be these transactions in different currencies. Not to worry. There's tools to help you with that. There's lots of bookkeepers I've found that know this kind of stuff. Don't just take it on blind faith. Ask them some general questions on, like, have they dealt with sellers that have sold in multiple countries? Although if you have a good bookkeeper now and you kind of explain the situation of what you're doing, they're going to understand it. And Xero and QuickBooks, if you're using one of those 2 softwares, which are probably the 2 biggest ones for bookkeeping, they both have versions that do foreign currency. So you can use QuickBooks or Xero. And then also what you could do, there's a company called A2X, as in A is an apple, 2 the number, X is in 0. It's like Amazon to 0 is what I think it originally was, because 0 is spelled Xero. So A2X accounting software, it's going to basically take the data from your Amazon account and put it into QuickBooks or Xero. And I think they do a few other accounting platforms as well. So hopefully the one that you have is connected to, or is able to connect. And they may even have where you can even like download spreadsheets and whatever. They make it easier than trying to pull the data straight out of Amazon. But you can even pull reports. Like my bookkeeper actually just goes in and pulls reports from Amazon and does it. So whatever works for you. Point being, there's lots of tools you can use to help you. So I wouldn't let the fact that, it might make bookkeeping a little more difficult. Yes, it might. But you're also going to be making more money. And I would definitely say that if I wasn't in selling internationally, I wouldn't be doing this full time right now, because that money I made early on, I made the decision after about 6 months of selling in the US to go to Canada. And I would say it was the best thing I ever did, because that gave me additional money that I was selling through my inventory faster, and that additional money and profit I could reinvest into new products, to trying different things. So it was almost like fertilizer on my business. In a way, it was almost kind of like throwing a little bit of gas on a fire, because even though it's 10-15% and it may not sound small, it's more than 10-15% of my profit, because a lot of my other costs didn't really change. Other than, maybe instead of a $30 version of Xero, I'm using a $60 version of Xero, or whatever the case is. But it's definitely worth it. So I highly recommend, if you're not selling in Canada, to get into Canada. Now, again, if you want to, take a look at, going into a little bit more depth on the checklist I created to help you with these steps, you can go to CanadaChecklist.com, just like it sounds, Canada Checklist, the country Canada, and checklist, you like that. Basically, you can download it, and it'll walk you through these steps and kind of describe what I talked about here as well. If you have any questions or comments, please leave them in the comment section down below. I'd love to hear what your thoughts are. I'm here to help. and the checklist. I want to make sure that this is a valuable resource for you as well. I truly believe that if we help each other out, oftentimes the questions we ask can help each other, or if you see a question someone asked in the comments, feel free to answer it if you know the answer to it is, what the answer to it is. But anyway, hopefully you found this helpful. If you did, please give me a thumbs up. And if you're not subscribed to this channel, please feel free to subscribe. Consider subscribing, because we'll have lots more great content coming out here soon to help you grow your e-commerce business, both internationally and elsewhere. So again, if you're not selling in Canada, I'm just going to leave you with this one parting thought. If you finished 6th grade level math and you have a driver's license or a passport, so you have the ability to fill out government forms, you can do all this, because everything else you already kind of did anyway. So thank you for making it all the way through this, I almost said movie, but this video. And I wish you nothing but the best in your e-commerce journey, and have a great day. Take care.